Our generation ability is to the tune of 70% is dependent on coal. We are overtly reliant on coal, and that is becoming a problem.
Oil is affecting rupee, rupee is affecting the inflation.
And then the Reserve Bank of India will come. They may not look through those crude oil price rises, but they may be forced to take a decision on interest rates. Please remember that our balance of payment deficit will widen. There will be a need, an NRI scheme. Why can't NRIs come in and invest? In 1973-74, far more stressful. 1990, the Gulf crisis again, Kuwait and Iraq war. 2 rounds of petrol and diesel price increases have already taken place. The Reserve Bank of India might have a meeting of its board and might decide to provide some more money to the central government. 10 years ago, 20 years ago, 30 years ago, still remains a problem. That is our vulnerability to oil. Now that is something which we haven't fixed even after so many years of this dependence on crude oil. We don't respond to a crisis. Central government and the state governments get together, and then the Prime Minister makes an announcement saying that, listen, this is the time for austerity, because the reality is that the world is in oil surplus, even in what's happening right now.
But there is a googly there. So even if oil prices go down a little, dollar itself would be much more expensive.
And let me say that this oil price induced crisis is not going to be there for long.
Hello and welcome to Macro Matters for Business Standard. I am Ankur Bhardwaj, and this is a new fortnightly conversation where we try to make sense of the forces shaping India and the world across the economy, markets, politics, policy, business, and sometimes even the broader anxieties of the moment. The idea behind this show is actually very simple. The world increasingly feels like one interconnected system now. Oil prices affect inflation, wars affect markets, climate affects power demand, and more deals affect currencies. And all of it eventually reaches households in some form. So instead of treating these as isolated headlines, we're trying to connect the dots a little. And there are very few people better placed to help make sense of all this than K Bhattacharya. AKP has spent decades tracking the intersection of politics, economics, markets, and power in India. And the idea here is not really to do an interview. The idea is to have a conversation with him and think through what's happening in India and the world. Welcome to Macro Matters, AKB.
Thank you, Ankur, for having me here.
AKB, over the last few weeks or months, the world has become a much more complicated place. One could say that the West Asia shock is finally transmitting its impact onto India, not because the collapse in growth, but because of other attendant issues. What do you think of that current moment?
Well, not just complicated, it's become complex. And we can see that the second round effects of what really started on February 28, 2026 has begun to be felt across the different sectors of the Indian economy and the markets. So it is a difficult time for whoever is in whatever position as a consumer, as a producer, as a market participants, or most importantly, as a policy manager in the government.
So oil prices have become a challenge. The rupee is facing pressure against the dollar. Investor sentiment has become a challenge for the economy. Inflation itself is a challenge, and it's all starting to reflect in households now. But before we get into this, I want to start with something more immediate. The weather boffins recorded a temperature of 48 degrees in Banda a day before yesterday. This heat wave is killing, and it's not just a weather story anymore. This is becoming a kind of a macroeconomic variable.
Well, you have a situation in our country where the duality of India once again shows. What is the duality in the power sector? The duality is that if you look at the country's installed capacity, we look like a very fairly comfortable country where our coal is just around 49% of the capacity. The rest is renewable or hydro. But when it comes to the generation, the whole thing changes. Our generation ability is to the tune of 70% is dependent on coal. So what is right now happening is that when we have to meet the around 265 megawatt of power, we are overtly reliant on coal. And that is becoming a problem in the sense that, yes, we have got a lot of renewable power capacity, but they don't always generate enough power to meet our daily needs. So, when it comes to meeting these the peaks of power demand, then we rely on coal, the trusted old coal. And that is what probably is the biggest challenge on the power sector right now. It is not that there is a huge deficit, but the deficit is in the generation of it, not in the installed capacity.
So, but it's not just a heat story at this point in time. It's a power demand story. It's a power grid story. It's a food prices story, and it's eventually an economic story. One could say it is impacting how we lead our daily lives. We might see some stress in agriculture as a result of this. So this can snowball into something bigger.
Well, you mentioned about agriculture. We are not yet into that right now. We still don't know what will El Nino contribute to Indian agriculture because agriculture is still not immune from weather, havocs like what El Nino will bring about. So agriculture would be obviously be exposed. But right now, as you rightly pointed out, we have the situation about meeting power demand. We are doing it well so far, but as I said, that the gap could be a cause for concern.
The reason I'm talking about heat wave at the start is because the lived reality of heat has suddenly become an economic story, and this is happening at a time when India is facing different crises at different types of crises across sectors, across directions, which now brings us to the crisis in West Asia. And the Strait of Hormuz has transmitted a huge shock, and maybe now is the time when you could say that the Indian economy has started to reflect that shock. We are seeing effects of it now.
We are beginning to see the effects of the Strait of Hormuz blockade on petro economy. We are seeing the impact of higher prices in the retail products. We are seeing the impact of higher prices in food products and many other items, fertilizers. Now, many of these impacts are not being immediately being felt because, for example, take fertilizers. The Indian agriculture is dependent on fertilizers, but that fertilizer is highly subsidized. So we already have a situation where our fertilizer subsidy, which was allocated at 1.7 trillion rupees, is considered not sufficient. So we have to provide for another 70,000 crore. So it becomes a fiscal challenge. So therefore, what I am seeing now is that the oil prices is going to have an impact at various levels. It is not just a question of airlines raising fares. It's not just a question of railways considering revising their tariffs. As a power companies will come back and say that now I am relying on oil to that extent. So I think the impact will be felt at various levels.
But the West Asia crisis has kind of exposed our external vulnerabilities, and it has, and also at a time when the external environment seems to have become a little more hostile. If not hostile, you could say unstable. And this instability, let's say, around oil prices, around shipping, and the rising cost of insurance. Those kind of things, it's now transmitting into the Indian economy.
We are dependent on the oil economy. Now, I think our reliance on oil economy, on oil imports in particular, is not of recent origin. In a sense that we are always dependent on imports of oil, but not to this extent. There was a time when we were producing, thanks to the Bombay High in the late 1970s, we were producing adequate oil, which would meet almost close to half our total consumption requirement. But today, almost 88 to 90% of our total requirement is imported. Our economy has grown, but we haven't really explored more fields. We have not produced more domestically. So we are reliant on Russian crude oil. We are reliant on the West Asian crude oil. So therefore, almost around 40% of our entire crude oil requirements comes to the Strait of Hormuz. So what do you expect? So this is bound to happen.
But the external shock is not another textbook ogre right now. It is starting to reflect in domestic data, etc. So oil prices, petrol prices at the pump are higher. Wholesale inflation has risen sharply, and
Your retail prices will go up when the next data comes.
And households are genuinely under stress. For example, if you go to the informal economy, you could see that informal workers are having to buy LPG gas at 200, 300, or even 400 rupees per kilo. So this is going to have an impact on household expenditure.
There's no doubt about it that your prices will become a cause for concern. Now, there is another macro level impact that I see. Now, the total amount of the revenues or contribution of the oil sector to the government system, and when I say the government system, it is not just the center and the states, is almost 2.3% of GDP. Around 7.5 trillion rupees is what the petroleum sector contributes to government finances as such by way of taxes, royalty, dividends, etc. Now that also will be impacted to some extent. So I think both you are talking about the impact at the grassroots level, at people working and workers using, they will be impacted. Even the government's the government's finances will be impacted adversely, and which is why at times I worry that we are getting into a situation where the government's ability to keep its expenditure going and provide the kind of support it has done so far by way of credit guarantees or by way of reduce taxes on the petrol and diesel, that will become a worry point for the government. So I think that is when we need to really look at these issues once again and what kind of other policy options that we need to have.
The reason this seems a little different is because none of these economic pressure seems isolated anymore. So oil is affecting rupee is affecting the inflation is affecting household expenditure, also yields, and as yields rise, it affects capital inflows, which in turn affects investor confidence or confidence in the economy. So,
and then the Reserve Bank of India will come, Ankur, with maybe they may not look through those, the crude oil price rises, but they may be forced to take a decision on interest rates.
Yeah, but some experts would go so far as to say that this is not a crisis but a polycrisis. Would you say that?
Well, I mean, is a question of how you define it. Yes, this crisis has got many heads. There are, as you rightly pointed out, there's a price effect. There is going to be the liquidity effect. There is going to be a fiscal effect. And what we are not talking about so far is there's going to be a balance of payments effect as well.
Absolutely.
Please remember that our balance of payment deficit will widen. Already, if you look at from 28th of February to now, our forex reserves were around $724 billion. Now they're down to 690 or so. So now that's a depletion. And why did the depletion take place? Because foreign money was going out. There was an overall gap to be met. So that gap was met through by using the forex reserves. So I think that pressure will keep rising. And if that also keeps rising, there will be a need to replenish that, whether it would be through an NRI scheme. Why can't NRIs come in and invest in more tax-free income, tax-free bonds or deposits, like we did in 1997, 98, or even in 2007, 8, or 2012, 13, we did that. We got money from outside, from Indians living abroad at a very concessional rate and good terms. Money came in because there is a gap in balance of payment. Around, some people say it is a $30 billion gap. Some people say it's a $60 billion gap. If that gap has to be met, India has to launch some bonds for NRIs in which they can subscribe and get a decent return. And India manages its balance of payments reasonably well.
But somewhere in the middle of all of this is the informal economy, which feels pressure before anybody else does, and gets squeezed much more. How will we measure that impact? Where will we see that impact? For example, small businesses, the informal workforce is already getting affected. We have seen news reports of workers migrating back or returning to their home bases from places like Surat, or maybe even the north.
Unfortunately, we haven't yet got adequate data sets to capture that stress level in the economy. But where we'll see it is in the consumption pattern. There is bound to be a consumption slowdown, and that consumption story, which one thought was reviving of sorts, is going to be postponed for some time, and that will in effect adversely impact your FMCG sector, which relies a lot on the rural economy as well. The rural Indian economy is a large part. So there is possibility of a kind of a vicious circle, that already the private sector was not investing enough. So now they will be even more discouraged to invest more, although there were early signs of their investment revival. So if they don't invest more, but at the same time consumption boom is deferred, and if the consumption revival is deferred, then their income is impacted. So there could be a vicious circle, and which might drive the economy to a lower growth trajectory. Everybody is saying that 7.6% last year growth, this year it will be 6.4, 6.6. You do not know where we end up at the end of the year, because this crisis is unfolding layer by layer.
But so I'm taking two things out of this. So one is that the headline growth number may still be strong, but the real impact may be in places where it will be much harder to measure.
Yes.
One. The second thing is, since COVID, we've seen this talk, and the data shows that, of a K-shaped recovery. This will probably make it even more acute.
It's possible,
So-
because already we are it's an unequal society, where 10% of population account for 60% of wealth. Already just about 3 to 4 million people pay income tax here. So it's an unequal society. There's no doubt about it. That might get worse, and that's not good news for growth either, because if you want to sustain growth, you need to revive consumption. If you cannot revive investment, because that's what this is a positive circle is, that you have more consumption, which leads to more investment, and therefore more consumption. So there's a positive circle, which is then what keeps growth going.
So, oil, inflation, rupee, yields, and foreign capital flows or outflows. right now they seem to be together in a chain. And one can understand that India is a strong enough economy, it can handle a shock. But what happens when all these shocks start reinforcing each other? Then it becomes even more tricky.
Well, of course, it becomes more tricky. It is not that such a crisis has visited India for the first time. Our dependence on oil is not a new phenomenon. Our vulnerability to foreign flows is not a new phenomenon, and the Indian economy has weathered those storms with tactical moves, whether it is going to be a FCNRB deposit like you did in 2012-13, or whether you had a India resurgent in bonds in 1997. I think we have the policy wherewithal to address these challenges, these different crises feeding each other. Is the most important thing is to get a sense of the extent of the crisis and how bad is our reserve position, for example. We need to get a proper sense of what is the kind of stock level that we have. Is the supply situation going to be as easy as, not as easy, is manageable as it has been so far. Now, the recent agreement with the UAE, that the UAE will be parking some of its reserves with India, is a positive sign in that sense, because India has access to UAE's oil reserves in a manner that it didn't have. So these are all policy moves and policy options that we'll have. As I said, that we can look at the NRI money. We have looked at the UAE oil reserves. So not insurmountable problem, but certainly stress cannot be avoided so easily.
So, would you say that this current situation reminds you of a period in the past?
Yes, I mean, I think, for example, what happened in 1973-74 was far more stressful. We didn't have the wherewithal of the foreign exchange reserves at that time. 1990, the Gulf crisis again, Kuwait and Iraq war, again it caused that kind of stress, where we didn't have enough. We were dependent on oil imports. But the government then was quick to respond to those challenges. Here also, the government initially was hoping that it will get sorted out, it will get resolved. So they took those steps like reduction in the excise special additional excise duty, in the hope that probably this is a temporary phase, we'll overcome it. But now it seems that understanding has dawned on the government that this is going to be a long drawn affair. So it appears that the government is preparing for a long haul, and the two rounds of petrol and diesel price increases have already taken place. This Friday, Reserve Bank of India might have a meeting of its board and might decide to provide some more money to the central government to help it finance its fisc more comfortably. So all those, I think you are seeing those signs in the government as well as in the Reserve Bank of India, that they are addressing these concerns. Not comparable, strictly speaking, but India, if you look at the size of the economy, its reserves level, it can withstand. But what is worrying is that what was a problem 10 years ago, 20 years ago, 30 years ago, still remains a problem. That is our vulnerability to oil. Now, that is something which we haven't fixed even after so many years of this dependence on crude oil.
You're suddenly talking about gasification of coal now, or coal now. So,
But I mean, the government is at last talking about gasification of coal, which the government should have done long ago.
It has already had ambitious targets for
Yes,
2030, which we are
absolutely.
not very close to achieving at all.
Absolutely. So therefore, our vulnerability to the on the oil front is something that, to me, seems to be story of a failure of several governments in the past, and I think that is, and whenever the oil prices come down, every government, including this present government and the past governments, they will suddenly become very comfortable, and some duty reliefs here and duty hikes there, but it's like a dog's tail. We come back, and my fear is that once this crisis gets over, oil prices come back to maybe 70, 80 or whatever, you will once again we'll see the same complacency, and we will not go back into exploration, making sure that the investment climate for the oil explorers and oil producers is better. And and where is this concern about creating more domestic reserves? Now, we had two oil reserves, strategic reserve. Third one was to be built in Odisha. Now, apparently, work on building the third oil reserve has not yet begun, although a decision on this was taken some years ago. So I think as a country, we don't respond to a crisis with long-term planning. We respond to a crisis with immediate management of it, and then after once the crisis is over, we just move on.
But past governments would disagree with this point, because they would say we never had such a long period of very benign oil price regime as we have seen in the last 12 years. I mean, I remember the time when oil price was $137 a barrel, and we have had a rather favorable regime in the last 10, 12 years.
Oh, absolutely. I think this was an opportunity lost.
So this is not usual macroeconomic volatility, but something much deeper, much bigger, which is now exposing the mistakes that we made.
It's a mistake that has happened. Also remember, at a time when the desire to move to renewable energy has gained traction. So there is that additional factor which was not there in the previous governments. In the last 10, 15 years, we have seen that the desire to go more green, go more for electrical vehicles, so that our dependence on fossil fuels come down, that has gained traction. Now we have made some work there. We have made 50% of your capacity in the electricity sector is now in the renewable sector. Now, which is a good thing to do, but we are not generating enough. That's a different matter.
But we're not talking about electrifying our fleet.
Yeah.
But we're talking about it at a time of a crisis instead of having done it earlier like China did.
I entirely agree with you that, this is the point that I was making, that we respond to a crisis in a certain way. And once the crisis gets over, we go back and we don't follow it up in a manner that we should.
Yeah. So I think this is a good time to slow down a little, AKB, and and talk about terms like bond yields and bond markets, which people hear about a lot, but often don't understand what they are. At the simplest level, a government bond is basically the government borrowing money from investors. So if you buy a government bond, you're effectively lending money to that government for a fixed period of time. And the bond yield is essentially the return you get for lending that money. Now, normally, countries that are seen as safer, more stable, and less risky usually offer lower returns. And countries that are seen as riskier, more volatile, or more uncertain generally have to offer higher returns to attract investors. So for years, one reason money flowed into India was that investors felt India was growing faster, returns were attractive, and the risk-reward equation still made sense. But now, something interesting is happening. US bond yields have risen quite sharply as well, which means global investors suddenly have another option. So AKB, now investors see that they can get decent returns by parking their money in the US instead of parking it in India. That has affected how capital inflows or foreign inflows work in India, and that is now also showing up in the economy.
Well, of course. I mean, I think whenever there is uncertainty all around, investors are fairly agnostic about where they come from, they will park their money where they get better returns. And this is exactly what is happening right now. But in India, what's really happening is something little more complex and a little more complicated. The Indian bond yields are also going up. And that is because the bond prices have come down because there is more supply of bonds because the government is borrowing more. So as a result, the Reserve Bank of India today has a responsibility of ensuring that bond yields don't go beyond a certain level. So they will have to step in with more liquidity into the system so that the bond prices don't go down and the yields go up. So I think it's a difficult challenge. It is not just a challenge arising out of external money, dollars going out of the economy, but even in the domestically, it is becoming a challenge for those who manage the Indian economy.
But that's just one aspect of it. The other aspect would probably be behavioral, right? For example, an investor sitting in Singapore, London, or New York, when he starts calculating that, maybe I can get decent returns without having to enter riskier emerging markets, why should I park my money there and instead park money here? That itself is changing behavior because then money becomes more cautious. And as a result, the easy money disappears.
Yeah, absolutely, absolutely. And that movement also takes place for a variety of other factors. I mean, for example, take the question of what kind of so-called ease of doing business, those norms operate in the country. Now, if the procedures are simple, are transparent, the judicial system is simple, then the desire to pull that money out is less strong. But if, let us say, the procedures are not simple and the market is not that attractive, then that desire to pull the money out gets stronger.
Because oftentimes people are quick to underline the fact that oil has become more expensive. It was much cheaper earlier. But they also forget that this has an equally big impact on the Indian economy because
absolutely,
because we've benefited from low global interest rates.
Yes.
Global supply has been abundant.
Yes.
And now that tap is going to probably get closed. This has implications for the Indian economy.
But let me, I entirely agree with you, but let me, flip it a bit. And let me say that this oil price induced crisis is not going to be there for long. So if you look beyond, let's say 1 year, you see there are rays of hope at least, because this price, we cannot stay at this level. It will have to come down because essentially the world is surplus in oil. The demand for oil is not that strong as it used to be earlier because there are many other avenues where you use you get your energies from. So therefore, this India's dependence on imported oil is a problem now, but once the prices come down a little bit, India will suddenly see an uptick. Now, when that happens, the risk is that we will once again forget what we are talking about now, planning for such a crisis, and that is, to my mind, is the problem. That we should not forget this, that such a thing happened, 1990 such a thing happened, 1997 such a thing happened, 2012 such a thing happened, 2007 the crisis happened. Now, we don't want a repeat of that. So that, to my mind, is a bigger challenge than even in what's happening right now.
But there is a googly there. So even if oil prices go down a little, dollar itself would be much more expensive. That would still make it more expensive.
Well, if oil prices come down, dollar may not stay that expensive because suddenly our deficit will come down. So the demand for more dollar will come down. So therefore, the market forces, if they are allowed to play, probably you will see that the rupee has gained some strength. So it doesn't remain that strong. So there are many ifs and buts there. But on the whole, I do feel that this situation will not last for long. There is a recovery which is there on the horizon. We need to be prepared for that. Take, for example, the West Asia reconstruction project that is bound to be undertaken, in whichever way you look at it. Now, that who will be the beneficiary of that West Asia reconstruction? Now, this is exactly what happened, in West Asian reconstruction post oil boom in 1973-74. The Indians who were in demand in that zone was because of the 1973 oil crisis. So similarly, I would say after this devastation, I would not be surprised if there is revival of demand for Indian workers, Indian construction sector going there. So yes, these are difficult times, but they will also change. And the important thing is, this is a time when we need to take the necessary steps. Where are our semiconductor plants? Are we doing enough on there? This is the time where we need to worry about our preparing ourselves for artificial intelligence. So this is oil is a challenge, but this is also the time when we should think in terms of preparing ourselves for many other challenges that will emerge in the years to come.
So you're saying this kind of a double shock of higher oil prices and more expensive dollar is not going to last that long?
My sense is that it will not, because oil prices have moved up and down, because the reality is that the world is in oil surplus, and oil demand is not going to surge. So therefore, the oil prices cannot stay at this level. So if it comes down, then India is going to benefit. But the important thing is, India must use this opportunity to bring about the much delayed reforms in the domestic economy, manufacturing sector, healthcare sector, education sector, skilling, reskilling. All those things can be underlined here. So that's the key thing here.
So basically, we need to be much more careful right now,
Absolutely.
and also undertake the kind of reforms that Mr. Gaba of Niti Aayog has been talking about.
Deregulation, state level. There's a lot that is happening at the level of the states. Now, states are, the sum total of states are much more than the center. Now, do we talk much about states? No, we don't. But I think the good news is that there are committees that are not being talked about, which are working on the state level reforms. Now, that is very important. There is a concern that labor reforms have taken place at the center, but the states might torpedo them by putting in place different norms. But now that needs to be resolved. So there are so many reform areas that need to be addressed. And yes, the current crisis is problematic, but we should not be so consumed by it that we don't see the possibilities of a revival after the crisis gets over.
And then you have the Prime Minister of the country giving the message that he just gave. You also wrote about it, asking the countrymen to follow, be a little more austere and consume with a little bit of restraint. This is a very significant message, not just politically but also economically. Do you think it signals panic?
No, I think what the Prime Minister could have done is send out a message, but take the political classes, the political parties into greater confidence. Probably his message, because this is not, this is a crisis where you need to take the nation along with you. So the Prime Minister alone talks about austerity measure is absolutely fine, but the fact is that the political parties in this country, there are many state governments involved. They probably should have been taken on board. Maybe a kind of not a National Integration Council meeting, but even a Niti Aayog could have convened a meeting of all the state chief ministers and some sort of a consultation could have taken place. So the central government and the state governments get together, and then the Prime Minister makes an announcement saying that, listen, this is the time for austerity. Then follow them up with measures without much delay. You still saw about a week's time between when he announced that and what the government's first steps were announced, which is increase in the prices. So I think intention, to my mind, was good, but in its execution, it could have been better.
So, do you think this was the government trying to tell the people now that the elections are out of the way, be ready for a tighter phase? Or do you think the government was finally acknowledging, yes, there is external challenge and it's become a little
I think
difficult?
it was acknowledging that there is an external challenge. It was coinciding with the state elections. There's no doubt about it. So that element must have also been a factor. But given the fact that it reduced those additional special excise duty soon after the crisis erupted in 28th February, seems to suggest that the government's assessment was that it is not going to last very long. So it is a maybe 15-day or 3-week or maybe a month phenomenon. So you try to insulate the people against any oil disruption in terms of higher price and all that. But I think after 4 weeks or 5 weeks, they realized that no, this is not going to last. This is not going to get resolved so soon. So now they are forced to take these measures, austerity measures, and then the oil price hikes, everything.
I just want to say that we still don't know whether the war is over or not.
We don't know.
Trump may start it
Absolutely.
tomorrow night or
Yeah,
whatever.
Yeah.
But the fiscal choices for the government have become much more complicated now.
Very complicated, very challenging. The fact of the matter is that the government is sitting on an additional expenditure of around 3 lakh crore. Now that constitutes around 73 basis points or 74 basis points of GDP, which means 4.3 is very well will become more than 5% of GDP. Now, if that is the situation, then either the government must have done some internal calculations of how it wants to manage that situation. The markets will be waiting for signals, because higher fiscal deficit would mean government will go out and borrow from the market. If that happens, then there is a pressure on the RBI to act in a certain way. So I think it's important to recognize the evolving reality and not lose time in sending out the necessary signals to the markets, the central bank, to people in general.
But there are no easy choices at this point, I'm sure. But what I think caught people off guard was also the fact that for 10, 12 years, we've only heard the message that we are one of the fastest growing economies, the fundamentals are extremely strong, and suddenly have a contrarian view coming in from the government. So that takes people a bit off guard.
The government believes in sending out a certain message that it's a growing economy. The fact of the matter is that it has been growing. Now, but along with growth comes many pangs. Now, these are one of those pangs. And to address these pain points is as important, as probably more important than saying that I am the fastest growing economy in the world. So it's a question of what stance you take, and the government in power, in my view, is within its rights to take a certain stance. In this case, the government has chosen to continue to talk about the fact that India is among the major economies, the fastest growing country.
But there is kind of a broader gap emerging between official optimism that has been projected earlier versus how the markets view it. So there is genuine market caution right now. So the government might say that the economy is going very strong, but foreign investors seem much more cautious now.
Oh, of course, they are cautious. They are looking at the market through a different lens. Why foreign investors, even Indian investors, are looking at it a little differently. They would rather like to invest outside. That's what the RBI data for the last 2 years have been showing. So there is concern over there. But India is a large economy. It's a consumption-driven economy, where the consumption side of the economy is much larger than the investment side. So if the consumption engine keeps growing, then I would say we can still, claim a growth rate of 5% or 5.5% or even 6%. But we need to do better than that of a size of country of India's size. And that's the real challenge.
So, what is it that we need to do beyond just showing them growth numbers to change what their view of the Indian market is right now? I'm talking about foreign investors.
Sure. I mean, I think we need to make sure that we are serious about our intent on being a strong manufacturing economy, in a sense that in spite of our promises to raise the share of manufacturing in the economy to 25% from what it was a few years ago to 16%. On the contrary, it has come down to around 14 or 13%. Now, how do you raise the share of manufacturing in the economy? You invest in skilling. You need skilled workers. You need to have international engagement on trade has to be better, so that your micro, small, and medium enterprises have access to the best products and services with which they can import easily and use it for their production and probably exports or domestic sales. So, and then you also need to have judicial reforms. Now, you cannot have a situation where the country's apex court issues a verdict, releases a verdict, which is almost retrospective in its nature. Look at the way the Tiger Global episode happened and played out. And this was almost like a repeat of what happened in the case of the Vodafone.
The retrospective tax thing.
Retrospective tax. Now, has anything been done to address those concerns? Now, what happens to other foreign investors? So they must be wondering that India is a country where the apex court can take a decision and nobody comes to his or her rescue. So there are those judicial issues which come in the way. There are some issues about you make an investment but you don't get the kind of skilled worker that you need. India has a big advantage of cheap labor, but that cheap labor also has to be more productive and more skilled. So I think on the productivity front and the skilling front, we have some distance to travel. So I think there enough attention has to be paid on both these fronts.
Another thing, we've seen the growth in the US economy has been growing pretty fast, and the main contributor has been artificial intelligence. And one of the theories is that India really doesn't have an AI narrative to sell, and capital seems to be directed towards AI investments at this point in time. So, could that be playing a big part in why foreign investors have cooled off?
It could be. You are right. It could be. But India is a large market. And still the basic needs, the infrastructure needs, the domestic consumption needs can be met through new investments. And there are the companies who would like to come to India to exploit this market. India is engaged with on trade agreements with various countries, various regions. And all these agreements have a clause on investments. And I think we should utilize that investment clauses to get more investment into the country, because there is a demand here. So AI, yes, of course, is an issue. But as yet, it is not that big an issue for Indian economy's demand sustenance.
But India does need a future-facing narrative.
Oh, absolutely. There's no doubt about it.
Maybe the real story here is that India is no longer dealing with one stress at a time. Heat, oil, inflation, capital flows, geopolitics, climate pressure, market nervousness. They now arrive together. And perhaps that is what makes this moment different. Because for years, India benefited from a relatively stable global environment. The question now is whether India's growth story is strong enough for a far more unstable world. And maybe that is the real macro question India has entered now. AKB, thank you so much for joining us.
Thank you very much, Ankur, for having me.
And thank you for watching Macro Matters with Business Standard. If you enjoyed this conversation, do subscribe, follow, and share this podcast. We will be back in a couple of weeks trying to make sense of India and the world once again. Thanks for watching.